Let's discuss this and more with our first guest on the show. Stephen England, Managing Editor, Global Head of G10 FX Research is with us. Stephen, thank you very much for joining in. You've been, of course, watching global markets very, very carefully. And we want to start right there. The point that I was just discussing with my colleague, that as you look forward the second half of the calendar year, or the second half of the fiscal year, expectations are that data in the US may not be as strong as it has been. But it's the polar opposite for us here in India, where everyone's expecting a pickup in earnings and growth in consumption in the second half. How do you look at the US picture to begin with?
Well, it's clear that the recent labor data suggests that the economy is slowing. I don't think it's falling off a cliff. It's been slowing for a while. It'll continue to slow. Um, it looks as if productivity growth is probably high because we're seeing not too many jobs getting created, but we are seeing profits being pretty strong. So that's a good long-term sign. But I would say, setting India aside and its growth prospects for most of the world, we think 2025 growth was actually front-loaded because everybody was exporting to the US to get in under the tariff wall. And now that the tariffs are raised to the levels that have been proposed, we expect that the trade will slow and the exports will slow. So it's not super bearish. We just don't have a H2 view that's very dynamic for the world right now.
Stephen, I know it's tough to predict the second half of the year. You called it dynamic, but which way would you swing? Do you think as these tariffs take effect, and they're going to settle significantly higher than what they were ever before, 6-7 times higher, even if you assume a 15-20 times as an average, is that going to end the bull run in the US market? Or do you think, there is enough firepower in the US economy to weather it? I mean, which way would you swing on the US markets and in the economy?
Well, on the economy, we think it is slowing, but we're going to have a pretty good productivity number for Q2 that's coming out tomorrow or the day after. Earnings so far look very good. In the past, what you found is that when earnings are good and productivity is strong, it pulls up everything. So, it's not going to be a 3% economy, but we do think that we're going. We don't think we're going to go into recession or anything. And then we'll have some fiscal stimulus, so it might add a little bit in the near term.
Hi, Stephen. Good morning. Good to see you. When we had some weak data coming out of the United States, and sometimes equity market participants, they like that because it gives you some reason to hope that the Fed now will have to go ahead and step on the pedal. Do you think that's likely to be the case? 2 more rate cuts coming in for the Fed in this year? Or do you think we should be satisfied with maybe 1 or maybe not?
Well, I mean, we have 1, but we're open to the possibility of 2. I mean, and we've been discussing the possibility of doing 50 in September even. Look, I think the Fed is very pragmatic. I mean, despite the issues with Trump, if the data are clearly suggesting the thing, we've been expecting them to cut in September. We always thought that the market was a little bit pessimistic on the short term. Where we do worry is, we don't see continuous cuts as is priced into the Fed funds future curve or the SOFR curve. We think that they'll do, 1 or 2 and then stop, which would mean, I think, that we could go back, at least for a while, to dollar strengthening. For now, we see dollar weakness. But once these cuts are passed, we think that the dollar could rebound.
Okay, so let's see when the cuts start coming in and how the market then reacts to it. Stephen, on this India-US, I don't know if you heard a little bit of our earlier conversation. Do you think foreign investors who are looking at the Indian market will take note of what's happening in terms of geopolitics, just politics, purely politics, with respect to trade, our equation with Russia? Will it have any bearing, is what I'm asking, when people are looking at allocations to India?
I would guess not in the long term. You look at all the issues that have come up. I mean, the U.S. has had a terrible week with Brazil last week, but now Brazil is rallying. there seems to be an intention to get a deal and to pressure other countries to come up with a deal. It's a process. It seems most of the time that you end up with a deal and markets rally. That was the story. The story of April was everybody was afraid that there would be no deal. At May, June, we began to think that there would be a deal. Markets rallied, and I think that that's going to continue to be the case. There's no upside to the U.S. for not getting deals.
So, Stephen, which would be your top bets in equity markets?
Ooh, I mean, we're not a big equity house, but for now, I can talk about the currencies. We don't think the dollar is going to bounce back, until the Fed is done with its rate cuts. But we do have we do think that there will be dollar strength. I mean, towards the end of the year, I think that the weakness we're seeing now is temporary.
So what are the levels you're working with then in terms of the dollar index? Because from an emerging market standpoint, that's one of the key monitorables for us. And, when President Trump took over, it went dancing away to around 111. And from there, it's lost its way. So if you're seeing some strength next 6 months or towards the end of this calendar year, where should the dollar index hover around?
Well, I think you should think about a move of maybe 4 or 5%, not more. I don't think that. There are forces in both directions for the dollar, and I think that that's going to prevent it from making a really big move. I think then, once you get it into the middle of 2026, we could see another episode of dollar weakness. But I think that for, say we're talking about the end of this year and into next year, I think it's going to be a strong dollar period, but, not super strong.
Okay, all right. We will keep that in mind. Stephen, thanks very much. Good conversation. Appreciate you joining us. You have a good rest of the day. Well, that's a view coming in from Stancy. Let's